Hello everyone. I am Dr. Hebatallah, Director of Jindal Center for the Global South. I'm deeply honored to host online our eminent guest speaker, an economist with more than 30 years of experience in international finance and development. He's a United Nations Special Envoy on finance, on financing the 2030 agenda. He was the former Minister of Investment of Egypt from 2004 to 2010, and most recently served as the World Bank Group Senior Vice President for the 2030 Development Agenda, United Nations Relations and Partnerships. His professional experience extends into the academic arena as a professor of economics and finance at the Faculty of Economics and Political Science, Cairo University in Egypt, and he has been a professor at several renowned universities in Egypt, in South Korea, United Arab Emirates, UK, and USA. He is as well a member of the International Advisory Board of Durham University Business School. He has authored numerous publications and articles in leading journals in the fields of economics, finance, and development. So that's why, ladies and gentlemen, we are really honored today to have him to speak to us on a very important topic, financing development challenges post-Covid-19 crisis, as he will share with us his expert opinion on policy options to governments to recover from the current crisis in the short term and mobilize the financial resources to achieve the 2030 agenda and its sustainable development goals. So please, everyone, join me to welcome Professor Mahmoud Mohieldin. Professor Mahmoud.
Thank you so much for the kind invitation and for the very generous introduction and the opportunity to speak to you, to the center, and to the Jindal Center for the Global South, and for the distinguished participants in this call and meeting. And I'm happy to share some updates on the impact of COVID-19 and highlighting, be happy as well to highlight some of the main policy measures addressing the crisis, dealing with the challenges of linking the short-term measures of emergency to the midterm and long-term measures of recovery, building back better, and ensuring sustainability. As we know, unfortunately, we lost close to 1 million lives because of COVID-19. The effect of the pandemic on livelihoods is devastating and resulting nearly 400 million jobs lost around the world. An additional 100 million people are pushed back into extreme poverty, which is the first rise in global poverty since 1998. Those experiencing food insecurity are expected to double this year to 265 million suffering or exposed from food insecurity. So I have a presentation that can really summarize some of the issues of concern and dealing with them, as I mentioned, in a policy framework based on the finance for development approach. Next, please. Yeah, slide by slide, please. Thank you. So this is the first one. Just reminding us of one of the main lessons of not taking the SDGs or the Sustainable Development Goals seriously. This is a report that came out back in September from an independent committee that was formed to share the lessons from epidemics and pandemics that the world was exposed to before COVID, and mainly dealing with the impact of the Ebola crisis in Africa. And this report had highlighted the fact that the world is highly at risk in a way that is confirming that pandemics are not black swans. They've been very much expected, but we're not prepared for them. The report highlighted the case that we are always in a cycle between panic and neglect when it comes to dealing with epidemics or pandemics. The outbreaks hit normally the lower resource communities much harder. And this doesn't have anything to do with you being poor or rich, because I've seen some poorer countries able to deal with the pandemics better. So it's the issue here about the overall capacity and discipline that you would have to deal with the crisis. And then the obvious recommendation was to invest in preparedness to avoid a continuation of the crisis, and in the future to invest more in prevention. Next slide, please. I think we're stuck here. It's a bit slow.
Mr.
Yeah.
Okay.
Yeah, thank you so much. We have this dashboard that can summarize the economic situation. Imagine that you are driving a car, that you have a dashboard in front of you, and you have few indicators guiding you on the soundness of the car, the effectiveness of the car, the speed and performance. Unfortunately, everything that you would hope to go up are down, and every indicator that you hope to be under control and down are up. So we are seeing here the cumulative number of confirmed COVID-19 deaths, and then the growth with the contraction figures coming from the international financial institutions, that the world will be seeing a decline in performance and the contraction of around 5%. Remittances for countries that are relying on remittances are losing up to 20%. FDI, foreign direct investment, is declining by 40%. We have an issue as well on trade by a variety of estimates, talking about a drop of around 13 to 30+% of decline on trade. I mentioned already the exposure to hunger. I mentioned already the 400 million jobs to be lost, and the 100 million approximately to be again back into the trap of extreme poverty. Meanwhile, global debt had been on the increase. I think this dashboard summarizes the situation that we're in today from both sides, the lives and the livelihoods. Next, please. As we saw, the response from different countries had varied in terms of the stimulus packages. And while we saw that some of the countries that had the fiscal space managed to spend up to 10% of their GDP and even more than that, while many of the low-income countries didn't really have the capacity to spend more than 1% and less of their GDP. Next, please. Let me put that back in a context. If you are putting pandemics as an issue of concern, which are basically there at the bottom of the pyramid, in the bottom of the cycle, I'll come to the pyramid later. But you have pandemics, communicable diseases, and non-communicable diseases as a kind of a constant threat to the global system. You have other issues of concern, like demographic transitions, fast in urbanization without adequate planning and resources, and of course, the big concern related to climate change. We have market volatility and commodity cycles affecting food supplies and food prices, and affecting as well the oil market with its volatility. We have issues when it comes to fragility and countries suffering from conflict and being in post-conflict as well. Technological changes, we have been following the debate about the implications of the fourth industrial revolution. There have been fast shifts in the center of economic gravity and the global economy, and there is an issue about the whole debate about globalization and the future of globalization. So when you are trying to address issues of concern in a particular sector or a particular country, or some issue of big concern or big opportunity even, you need to put that in a context of all of these changes on what I call the mega trends and their impact on the economies and the global system. Next, please. I argue here that one of the ways to respond to these kind of changes and the mega trends is to consider the SDGs framework. And this is a way to address them in a kind of a policy approach. As you know, the SDGs, which were discussed and blessed in a special summit in September 2015, have 17 goals, 169 targets, and 230 indicators to measure them. And this is actually a way to present them by a focus on ending poverty and reducing inequality. We have a group of SDGs related to climate change and environment. I have a group of SDGs dealing with social and human development, and other SDGs dealing with infrastructure, utilities, jobs, and growth. And then you have issues related to rule of law and governance, and you have the overall partnership context. This is the way that I like to present the SDGs. Next, please. Then, if you are a policymaker or you are advising policymakers, there are normally 4 levels of action when you are dealing with the SDGs and trying to factor them in the work. There is the local level, there is a national level, there is a regional level, and there is a global level. Meanwhile, you need to put that all in a policy framework to enable the policymakers to see how can they deal with the SDGs as goals and means of dealing with the challenges. At the same time, deal with effects of disruption like the pandemic shock that we are facing, or the other areas of concern that I just mentioned. You put that in a framework, and in order to do the right thing toward achieving those goals by 2030, you need to invest in human capital, you need to invest in resilience of economy and society, you need to invest in infrastructure, including the digital infrastructure. In order to do that, you need finance, you need data, good evidence, support, and you need, of course, good implementation in the field. And you should always put your eye on the target, which is basically achieving the SDGs. Next. So here are these are the 3 investments in human capital, in health systems and education, investing in resilience, and investing in infrastructure. I'll come back to those 3 in seconds. Next, please. sometimes it is slow, so be patient with us, please. So here we are talking about investment in infrastructure for a digital society and digitalizing the economy. No, you are fast here. No. Back, please, to the slide that was talking about investment in infrastructure. No, there's something wrong with the, yes, thank you. Investment in infrastructure and investment in society. You need to invest in what I call DNA, based on some acronym that came out from the World Bank a couple of years ago. The DNA here means data, networks, and artificial intelligence. You need to invest in fiscal infrastructure and new industrial and investment zones to create opportunities for jobs. Next. And I hope that the slides are smooth at your end. Right, you need to invest in health, educational systems, updating and the skills based on all of these changes in the labor market. And so this is a kind of putting investment in human capital in the forefront of activities, not just infrastructure, but human capital is key. Next. And as I said, you need to invest in resilience, including social protection, climate and disaster resilience, and you need to put some emphasis on risk identification and preparedness in the context of the policy frameworks. So these are the investments, the three investments. So this is, you can almost say that even before having the COVID-19 and the crisis associated with it. But now we have a crisis, and the crisis management is a priority. So as part of the work with the UN system, and as a response to the crisis, they formed six working groups dealing with different aspects of the pandemic and its impact on lives and livelihoods. And they came up with three groups of recommendations: a group for emergency mobilization response, dealing with issues related to creation of jobs, attaining inclusive growth and sustainability, dealing with debt, liquidity, how to bring the private sector creditors into the scene, and dealing with illicit financial flows. So I'd like you to imagine that you are advising a Minister of Finance dealing with budget, and you'll have a variety of issues of concern there. But the problem with crisis, they push the system to be focusing more on short-term emergency measures. The lessons of managing previous crises are telling us that it is better to link the short-term measures to the mid-term and the long-term measures. It is hard, of course, because the emergency measures normally take priority by the policy makers based on the pressure coming from society and the general public, but they need really to balance the action that they make in dealing with the emergency with what they have to be considering in dealing with the recovery and building back better. And these are just examples of the policy measures that have been put forward dealing with the emergency for the mobilization of resources to deal with such emergency. Second, please. And as I said, you need to invest in sustainable and inclusive recovery. And again, there are measures related to how to allocate the adequate resources to deal with the creation of jobs and maintaining inclusive growth. And meanwhile, dealing with debt concerns, liquidity, and issues related to creditors' engagement. Next, please. And finally, you need to enable a sustainable and resilient future. Of course, it's easier said than done, But there are some countries that are already doing that, and we have many examples. For instance, in the EU, with their recovery fund, you can see this kind of linkage that had been established between the emergency response and the investment in recovery and resilience through the creation of the 750 billion euros fund. Next, please. And again, not to lose sight from the SDGs, you need to put that in the context of the finance for development. As you know, there is an Addis agenda that needs to be revisited to guide us on how to mobilize funds in this river of funds. And the funds are basically from public and private sources, from external and domestic sources, how to mobilize them in order to finance development. It was difficult before Covid-19 crisis, and it continues to be a challenge, of course, a bigger challenge after Covid-19. Next, please. You may have come across the recent emphasis on impact and investing with impact in mind, with an investment that will have economic return, financial return, and a social return. There has been a great deal of impact washing, greenwashing, climate investment washing, because there are no agreed standards as such globally. As you may have followed, some of the international financial entities, including the IFC, has come up with ideas related to the principles and standards for achieving impact investment, and putting these principles and a kind of good understanding with the market participants in order to standardize the definitions and applying them. And there is an interesting report that just came out a few weeks ago by the Global Investors for Sustainable Development. They issued a report with the 66 recommendations, 44 for the global system and 22 for the European or the EU to be considering them in the near future. And it's all about how to bring investment closer to the sustainability framework, or what so-called ESG, environment, social, and governance guidelines for investment. Happy to take questions about the impact investing. Yeah, if you can just follow me before you change the slide. Thank you so much. I'm just telling my colleague who's perhaps faster than me in going from a slide to the other, like just to minimize the confusion that may be causing you. So what I'm saying here, that you need really to take these issues about the need for standardization of investment and finance framework. Until that happens, there is a great deal of experimentation in the field. And 2 days ago, you saw New Zealand to be the first country embracing carbon costing as part of their engagement on sustainable investment, and this is going to be applied by the monetary authorities, by the regulators. Next, please. So, yeah, we're summarizing here the GISD recommendations to the policymakers in government, in business, and society, recommending the actors to be bold, to act fast. But you may have seen me highlighting the issue of standards and reporting on them, and to make them mandatory or compulsory. And as I said, New Zealand is the first country to do that, and I expect that many countries will follow suit in the near future. Next, please. I mentioned a lot governments and advising government, but advising the business community and the CEOs is of no less importance. And here, based again on this report, trying to revisit the corporate governance codes and link them to investors' stewardship codes and how to link the ESG to the SDGs for sustainable future. The issue here, again, is how to manage and link the financial returns to the social returns. Again, the guidelines shared from this report could be helpful for the business community. Next. The details of this report are basically to address market participants and the regulators and how to factor in sustainability in the decision-making of firms and not to take them as a kind of an afterthought. But for them to do that, we need a mix of market discipline and regulatory development at the same time. Next, please. In a post-COVID world, in addition to what you can really be doing within government departments or within the corporate decision-making process, there are a variety of codes about social distancing, about protection of clients, about protection of citizens. So issues related to compliance are going to be further enhanced in the future. And I'm just getting here from one of the consultancy firms examples of what should governments and employers do in a post-COVID-19 world in order to maintain safety and stability and push for growth at the same time. And you can see these kind of measures ranging from how to deal with clients to social distancing to emergency response to minimizing liability on the employers and governments and raise public awareness. Next, please. Yeah, to finish this this presentation, I'd like just to say that there are 6 points here that require some discussion when it comes to the policy implication. It seems by the news coming about the development of the vaccine and how effective it would be, that the issue of coexisting with the with COVID-19 rather than the hope for getting rid of it are going to be the likely scenario. So the threat is there and it continues to be there even after the vaccine is developed. So the issue here is basically how to coexist with the COVID-19. Social distancing, washing hands, using sanitizers, they are becoming now the common sense approach, but they are costly. I mean, if you know that almost 900 million people do not really have access to water, that we have close to this number again, 900 million people plus are suffering from extreme poverty, that there are many cities, towns are suffering from informality and they don't really have the luxury of maintaining social space because the density of populations. So even when you are assuming the most basic approaches of how to deal with COVID-19, you can see the challenges facing many developing economies. Meanwhile, you need to fight recession, as mentioned before, through investments and mobilizing finance. You need to harness debt challenges. You need to embrace digitalization. Digitalization could be a double-edged sword if you are not managing them better. And they could create great opportunities, but they could deepen inequality at the same time. You need to adopt localization as a way of getting matters done. We have seen the rise of communities' role during the last a few weeks or few months since the declaration of the COVID-19 crisis by WHO in March. And then dealing with the new role of the state as a regulator, you might expect some more interventions from the state to protect the market, but sometimes the issues may go beyond what's needed, like having a monster or a leviathan. Having said that, I'm looking forward to the discussion today, and many thanks again for the kind invitation, and happy to share this presentation with you for your reference in the future, and revisiting some of the references and reports that I shared with you earlier. Thank you. Back to you.
Thank you so much, Professor Mahmoud, Mohieldin, for sharing with us your informative and insightful presentation on how to overcome the current COVID-19 pandemic crisis and to build resilient societies and sustainable societies over the medium and long term. So now, Professor, if you allow to us, we shall start the Q&A section. And I am seeing that our attendees, they have started already to write their questions. So I will start by a question from Firdos Malik. He is asking countries. He has two questions actually. First thing is saying countries who are affected badly by COVID-19 shrinking their GDP and having negative economic consequences. So what type of investment should they should focus on to recover their economies? And what are the main channels to create jobs after post-COVID-19, and how much time it will take to balance the crisis of the countries, regarding the countries who have been badly hit by this current crisis. Do you like, Professor, that I tell you like a brief of like 2-3 questions, and then I will give you the talk? Okay, so that was the first question, and we are having another question is regarding the consequences of COVID-19 on international trade and trade pattern. So I have Deniashri is asking, will the trade pattern globally become more inward or outward? And what kind of policy should be designed for the distribution of COVID-19 vaccine, especially regarding southern countries? How do you see? Another question is regarding how do you balance these challenges while promoting economic growth within tight budget for developing economies and in southern countries? Another thing is regarding the global debt. So Muhammad is asking how to reduce the impact of the next wave of the global debt, and what is it the impact specifically on developing countries? Yes, one question is regarding, I will take that one last question if you'd like, Professor, is regarding how to bridge the short-term emergencies and long-term measures to become sustainable practices when such limitation exists in the current and post-COVID-19 era. So this is like the first group of questions.
Right. Thank you so much. And while I speak, my colleague here will share with you in a few seconds what I mentioned as a pyramid, because that may help answering some of these issues and remind me of the policy framework developed by the UN system. So you had variety of questions really, covering health aspects, dealing with short-term, long-term issues of concern and debt. And it's very important really to emphasize the coordination requirements for governments to be enhanced. If you take the question on the vaccine, yeah, so this is the pyramid. I'll leave it while I speak, and I'll tell you, and there is a temple as well to be alternating with it. So if you can share the temple as well. Those two slides, just to encourage you to visit the website of the UN and the different policy options. So let's imagine now that you are in a discussion in a cabinet of ministers or advising government or writing about the topic, and you see all of these kind of crises happening at the same time. The crises of the past were financial primarily, or debt crises, and the fear was basically about how the financial crises are going to be impacting the real economy. And the fear again, how the deterioration in the real economy is going to be impacting the livelihood and lives of people. Now we're having this kind of perfect storm. So we need really to work simultaneously in the health front, in the real economy front, and in the finance and debt front. So in the health front, you need, for the question on vaccine need to be really dealt with as public good, a global public good. They shouldn't really be subject to market competition. Yes, there will be cost of producing them, but we are not safe until everyone and each one is safe. So you need to make the vaccine available to everyone, affordable, effective, and universally accessible. Playing vaccine nationalism will not really help, because it doesn't really help you if your country or your family or your neighborhood is safe, while the next neighborhood that could really still carry the threat is without sufficient protection. So here, even if you take it from a very selfish approach, being selfish in this matter could be a bit of contradiction here, means at the same time that you need to be caring for others and adopting an inclusive approach to vaccine availability. That's why there is that global fund for vaccine, and there is an appeal to replenish and mobilize the fund to make the vaccine available once it is approved by the authorities. The second area that you mentioned in your question is about how to mitigate and and harness this storm through short-term, mid-term, long-term coordination. And here, perhaps this temple in front of you is telling you about the work of 6 discussion groups that I mentioned. One is dealing with matters related to inclusive growth and creation of jobs. Discussion group 2 is dealing with sustainability. Discussion group 3 is dealing with matters related to global liquidity and SDRs. Discussion group 4 dealing with debt vulnerability. Discussion group 5 with the role of the private sector creditors, and discussion group 6 dealing with illicit financial flows. So these groups of working in partnership kind of a process between member states of the UN system and professional organizations have been very much helpful in getting us that pyramid that I shared with you, a pyramid of many ideas, and it's available on the UN website for your consultation with an executive summary for the busy reader. And I encourage you to read it. But if you want to take the summary of it, it is basically how to use the budget in an effective way to link the short-term emergency measures to the mid-term inclusive growth and recovery measures to the sustainability measures, without really admitting the importance of budgets and centrality of budgets of the state and of local authorities. Will not be able to achieve these goals in dealing with the crisis. The other thing you mentioned is debt. Well before, you can get rid of, please, of these slides now. Thank you so much. Even before the COVID-19 crisis, the world was exposed to a debt challenge and debt difficulty. If we read the reports coming from the IFIs, the international financial institutions, before COVID-19, you would have seen many of these reports talking about the fourth wave of debt. It's number 4, assuming, of course, that you know that the first wave was about the Latino crisis back in the 1970s and 80s. Then you had the emerging markets crisis in the 1990s. Then you had the global financial crisis of 2007, 2008. And the fourth crisis is happening because of this strong accumulation and fast accumulation of debts, not just by governments, but by governments, private sector, and household sector. If anything, during the last 6 months, debt accumulation had even increased faster. So anything to do with management of your finances has to take into consideration debt management challenges. And there have been many proposals. The DSSI proposed by the IFIs and the G20, and with full support from the UN system, is good in the short term to give you breathing time. This DSSI means Debt Service Suspension Initiative, to have a moratorium and repayment for some time. If you are indebted to someone and you are in difficulty, so that creditor can tell you, well, instead of paying immediately, I'll be waiting until your situation is getting better. But that will not really resolve the problem if you are not going to be getting better. So you'll be asking for another extension, another extension. So I think we need really to be realistic. Here, matters related to debt restructuring, debt resolution, building the architecture of finance is essential. Next, please, of any questions.
Yes, Professor. We had that question about international trade. How do you think about international trade after COVID-19? Is it like we are going to see protectionism waves that are going to come in the next in short term? And there is that question regarding it is a new question regarding priority of investment. So they are asking, is there a different priority of investment that is differing in southern and northern countries? And regarding global south countries, what are the available options for them to opt for a resilient future, like the EU and Occidental countries? And one more question is regarding migrant workers. For policies to protect migrant workers and reduce the cost of labor of migration. So I think this is the main questions that are remaining here.
Right. Thank you so much. So, yeah, trade, sustainability, and migration. First, trade. We have seen the problems of trade protectionism arising before COVID-19. And with the shock to the supply chain, we have seen calls for rewiring the global value chain. And for the benefit of the developing economies, globalization, which basically means opening channels of trade, investment, and migration, they should be beneficial if they are handled better. So the markets are not big enough in developing economies to create jobs. So we need to open up by exports to enhance the demand in your products. There is scarcity in capital in developing economies, so we need to open up the channels in order to mobilize capital flows. Labor market may not be sufficient to provide jobs for the job seekers, so migration is essential. So the advice here, it might be in the short term, short-sighted approaches by some countries with the rise of xenophobia and fear of competition, that you get all of these calls opposing opening up the system. But we had seen that the countries that managed to open up wisely during the last 50 years, and even directly after the Second World War, they managed to achieve growth, bring investments home, and to benefit from the return on migration. So it doesn't really help at all developing economies to follow this kind of a recommendation that close, restrict, oppress, and put controls. You need to manage better, not to close the system. For the issue about sustainability, it's a matter of prioritizing and rules of engagement. Through the budget, you need to have fiscal incentives, and through the regulations, you need to have a good system for carbon pricing, for dealing with the environmental challenges, and dealing with the issues of concern for the general public. And I'm seeing from the developing economies great deal of interest in sustainability and dealing with climate change and the protection of environment. This is not just an issue for the countries of the North, but you are right about how can you afford doing that. Good news is, if you focus, for instance, on climate, there are huge opportunities in investment in adaptation and mitigation that are very useful to include them in the system of encouraging investments, public and private investments in your countries. And what was not affordable in the past, like renewable energy, is more affordable today, and this helps in the sustainability. What was not affordable in the past in sanitation systems and water sanitation and recycling is becoming now a good line of business. So how to factor partnerships between the business sector and the government as part of the solution is a priority for the work. And then on the migration, I think I mentioned that before, but let me just say that the rise of ultra-right groups in few countries and short-sighted approaches to handle matters and the rise of xenophobia are political constraints against mutual benefits and progress. There have been many reports confirming that migration is not just good for the home country of migrants, if managed well, but is good as well for the host countries. The migrants with their skills, they fill a gap of knowledge, they fill a gap in the labor market, they are hard workers, their efficiency and steadfastness have been approved in many countries, and they contribute to the system rather than taking from it. And this is based on evidence. And I encourage you to have a look on that report on migration and development by the World Bank a couple of years ago that gets updated regularly. It's not just about remittances. It's about the contribution by the migrants to social, economic, and human development in the host countries. I know that this kind of an answer may not please those who oppose migration, but we need really to be evidence-based rather than being ideological when it comes to economics and economic policy making.
That's right. So we have now answered all questions in the Q&A, and thank you, Professor. Thank you for accepting our invitation, and we really owe you a special vote of thanks for accepting my invitation and first, and for being with us today. We are really honored and greatly appreciating that you have been with us today. Thank you, Professor Mahmoud Mohieldin.
Thank you. It's been a pleasure, and I wish you all success. It's a good opportunity for me and my team to update you as well of the work that we have been involved in. And I encourage you all, please, to have a look again on this PowerPoint presentation. Visit the websites of the UN, and I shared as well my LinkedIn for those of you who want to follow up the issues I raised today with any questions. And I wish you all success, safety, and prosperity. Thank you so much.